Hello, everyone, and welcome to today's weekly market check-in with myself, Greta Wall, and the leader of T3 Live's Momentum Express virtual trading floor, JR Romero. JR, I have a little bit of an echo there. Whoop. All right, JR, thanks for doing this with me today. How's your trading day going so far?
So far, so good. We had a bit of a surprise there with NVIDIA and AMD. We had really nice trades in both. Yesterday took a little overnight and spent a good part of the morning digging myself out of the rubble, but all is good. As they say, you mess with a bull, you get the horns, right?
Yes, and NVIDIA definitely seems to be the bull to mess some people up in the market lately.
Sometimes you're the hammer, sometimes you're the nail. Go ahead, I'm sorry.
Yeah, right. Let's first talk about the CPI, and then we'll get into what's been happening with NVIDIA and AMD today.
Sure.
So as we saw yesterday, we got the latest inflation numbers yesterday morning with the CPI, the headline coming in a little bit hotter than expected on that annual basis, the core a little bit hotter than expected on both the monthly and the annual basis. But the market just did not seem to care. The S&P 500 closed at a new all-time record high yesterday after those hot inflation numbers, pulling back a little bit today. But what did you think about the market reaction to the CPI yesterday, and how did you navigate it in your own trading throughout the
day? That's a great question. So we had a very clearly delineated demand zone. We were watching in the S&Ps, which was 5181. So I told the room, guys, when the market came in, I said, if we hold 5181, I'm going to maintain a bullish to neutral bias. If we break 5181 and fail to retrace, bounce, and retake the level, if we can't get price acceptance over that level, I'm going to be bearish. So we were very much shorting the market off the open. AMD, surprisingly, and really we're able to call the bottom in stocks there. I told my room, we're at support here. We're at a clear demand zone in the S&Ps. Careful with your shorts. And once we saw buyers come in, it was really just a matter of entering the right trades at the right time. We certainly did that. We had a great day yesterday.
All right. Do you want to walk us through any of the trades that you took yesterday and how they went?
Yeah, sure. So we shorted AMD right off the open into the 195 pivot or so, and then that's when the S&Ps were starting to hit the demand zone. Right here, we were talking about right there around 945, and then we were looking at potentially a bottom in NVIDIA. So NVIDIA, I'm going to go to the 15-minute chart here. So NVIDIA, what we were looking at there was an unfulfilled two-wave corrective off the break of the channel, and we had two VWAP bands we were watching, and I was looking at 865. Not that VWAP bands actually inform my trading decisions, but they just give me a general point of reference in terms of how many people are actually underwater based on the entry point. So what I saw here was clearly the inability of the bears to take this for a full second wave corrective. And when we held this prior consolidation here around 857, and this is Tuesday right here, and we're able to hold that level and make a new high, we were very interested in longing NVIDIA. So I'll go to the 2-minute chart so you guys can see here. So we long NVIDIA right there at 877, and the levels we called out were 892.50 and 897. So just a nice chunky trade there. Caught a huge amount of the move. After that, it broke 900. A bunch of our traders bought the pullback here. One thing we really like to do is buy pullbacks and igniting sequences, and some people, caught the move past 909, which was nice. And then we were just waiting for NVIDIA to consolidate. We drew this declining top sign here, and then when we put in a higher pivot low and held 899.76. We hopped back in at 899.76 and sold it into 918.50, 919 right into the close. So just a beautiful couple of moves there in NVIDIA. And again, all of this based on the idea that the bears really have momentarily failed here. They typically, when I see a very strong bull channel fail to have a convincing two-wave corrective and just starts to show very tight consolidation here, this falling wedge, and then I get the pop, higher pivot low, and a little base here. That's typically my signal that the buyers are about to take control.
Great. All right. We'll go back to our what's it called? Inflation discussion. So it seemed like much of the rally yesterday was because the market, it wasn't enough. The CPI, that little bit hotter CPI wasn't enough to tell the market there won't be a rate cut in June. CME Group still showing about like a 58% bet on that rate cut happening in June, but there's still more inflation data to come this week with tomorrow. There we go. The PPI will be out tomorrow morning. That's, of course, a leading indicator for consumer prices. And then February retail sales also coming out tomorrow morning ahead of the open as well, just to get an update on consumer spending activity and how consumers are faring while prices are still high. The PPI has typically been a more muted response from the market, but in the last couple readings, it's definitely been arguably more important for the market because people are trying to gauge like where are things going. Do you expect a more normal response to tomorrow's number? Does it matter more than yesterday's number did?
I don't think so. We had a 0.3% prior, and consensus is 0.3%. So if we come in on that print month over month, and core PPI prior was I think half a percentage point. Consensus is 0.2%. I think if we come in line, we're gonna head higher. I think what's going to be challenging with this market into Friday is the triple witching. So you're gonna have deal with a strong call wall at 5,200. I guess.
Talk about what triple witching is and how it impacts the market dynamics.
Triple witching. Where do we start? Well, it's because
I know you as a trader. Sorry, Jared. You as a trader, just so everyone understands, like you pride yourself on really understanding market dynamics and how markets interact with each other, whether that be currency markets with equity markets or dynamics like something like a triple witching. So I think you'd be, the perfect one to explain what's coming on Friday.
Yeah. So options expirations are typically extremely volatile as options positions are about to expire, and they usually like to defend those positions, and it causes a lot of volatility. So the triple witching is basically the expiration day for stock options, index futures, and I think stock index options. I believe I'm correct on that. So it occurs quarterly. So we got the third Friday of March, and then June and September and December, I believe. I wasn't expecting a pop quiz. So you're a tricky one, Greta. So anyways, basically it generates a tremendous amount of trading activity and volatility. And we like to really watch levels where we see a lot of open interest because they tend to defend those with great gusto and alacrity. So it can be a very tricky day to put risk on. thankfully, we tend to do really well on those days. Simply understanding where levels are very likely to be defended. So we take we take the time to pay attention and see where the key open interest levels are, and yeah, take advantage of it.
Yeah. All right. The majority of your trading within the room, are you doing mostly just straight equities, or do you like to, like on a Friday like this, will you do some lottos on calls or puts? What is your style?
Great question. So I trade equities and options and quite a bit of S&P and NASDAQ futures, mostly S&P futures. So
Okay.
I'm a big fan of trading the SPOs, and we watch them all day long. That's primarily how we call market direction, is by looking at the S&P futures.
All right, makes sense. All right, so NVIDIA at this point still remains the leader of the market. It seems to be how NVIDIA goes, so goes the market. As yesterday, the market rallied. Today, NVIDIA, let's look at the update. NVIDIA is down much further than the market itself, but definitely putting a drag on there. What's happening with NVIDIA, and what is your strategy on the stock at this point?
So NVIDIA is consolidating and holding 887.50, which is the level I need it to hold. What I'm seeing in NVIDIA is a failed two-week corrective, a consolidation, a pop. Clearly, this was a little bit of excessive and exhaustion high, but we're holding these prior pivots here and consolidating. So I see a bit of a curling wedge reversal, and I see it going higher. The thing with NVIDIA is they have a huge catalyst coming up on Monday, and as I'm sure you've heard, it's the 2024 GPU Tech Conference, where they're expected to make some wild and crazy announcements. So I definitely expect a pre-anticipatory kind of move. You could argue that some of that was yesterday, perhaps. I do expect it to continue higher into Monday. Probably a lot of positioning on Friday. Yeah.
All right. So if we're thinking about next week, I do want to just let everyone know, I've put at the bottom of the screen, if you go to t3live.com/JRlive, JR's trading room, the Momentum Express virtual trading floor, will actually be open next week for an open house. So you guys can get free access to the room for a week to really trade alongside JR and see what it's all about. Especially, a great week with that conference coming up for NVIDIA, and then it's Fed week as well on Wednesday. For people who haven't been in the room before, JR, kind of walk us through the structure of your room, how the day goes, what you're doing for traders in there, etc.
Yeah, it's a fantastic community. We have a lot of pro full-time traders in the room who excel at sharing great trading ideas and levels. We have a market watch list around 9 a.m. We kick off with the market at 9:30, and then I'm around most of the day providing market commentary, levels, trade ideas. We're squawking news all day long, and for the beginner traders, I really walk through a lot of trades every day. What I'm thinking about an idea and how it develops, talking about the levels, and kind of narrating how I execute the idea in as much detail as I can. And then after the close, we typically have a market wrap up, and we kind of have not technically an open mic, but a sort of forum for traders to ask questions and to send in their trade reviews, so we can review all of the trades that come our way. That way, traders, if they have a question about a trade or they're not sure they executed it properly, they send in their trades and we review them for them. Kind of go over the idea, and I give them my feedback in terms of how I would have traded it. So it's a really fun room. If I wasn't a moderator, I would probably be in it as a client, just because of the quality of the traders in there. And it's great to trade with your friends. So that's a good time.
Great. And again, that's just a reminder for everyone. That is t3live.com/jrlive to sign up for that open house. It'll be all next week, the 18th through the 22nd. JR, we got a comment from YouTube. And this reminds me, Amy said triple witching, also quarterly rebalancing in the S&P and the NASDAQ, and equal weight ETFs need to sell the strongest and buy the weakest to stay equal weight. That quarterly rebalancing happens as of the open Monday morning. The biggest news happening there is that SMCI is officially joining the S&P 500. What kind of action are you expecting on SMCI next week as that change happens?
SMC. I mean, if you look at the SMCI chart, it's really hard to be anything but bullish. You know, I've been hearing people wanting to short SMCI since it hit 380, and it hasn't really gone so well for them. I mean, does this look parabolic? Yeah. I expect the trend to continue higher. I really have. I mean, it's an insane looking chart. But until we have a major reversal and a failure to take out this or to re-enter the base, I can't really be bearish on the name. I mean, it's insane to really want to buy SMCI at $1,200, but people are doing it, obviously. I don't partake in this one personally. It's porridge is a little too hot for me. I'm a base hits kind of trader. This is a little much, but
yeah. All right, so let's look back on the last week-ish for your trading and talk about some of the best trades you've had over the past week. You can walk us through them, what your thesis was heading into them, how you navigated, etc. So I'm gonna put you on the spot to think about some of your, maybe your top 3 from the past 7 sessions.
Yeah, sure. So we've been really successful at playing the ranges in Tesla, and for example, shorting it when it needs to be shorted. So Tesla off 174.80, catching some really nice moves into the 172s, 171.90s. It's been a really great volatile scalper. Nvidia yesterday, just an absolute blowout day for us in the room. With Nvidia over 877 to 892 and 897, and then again the reversal from 899 to 918. So just capturing I'm not very good at the maths, but that's a lot of points there in one day. We've been very active in Google since it took out 136.17. And we've been on the daily playing the opening range breakouts in Google, which has been fantastic. This morning, we were very active in Amazon. So Amazon yesterday through the V-top, we played this entire move here. So, you know, you had a V bottom, a rejection of the prior pivot high on the bounce, and then a beautiful entry right there in AMZN. And this morning, again, I call this a curling wedge reversal here. Entered AMZN on the curling wedge, traded it through day highs, and then re-entered it here for the bounce. And we're still long Amazon, expecting this ascending triangle to hit our final target at 177.50. So, you know, very active in the large cap tech names all week. And PayPal this morning, another really good example of kinds of ideas that float around in our room here. We were looking for the buy setup here off of 61 and a quarter, and we had 62.95 and 63 as our target. We were looking at the February lows right there into this prior area. So just a beautiful move in PayPal today. The payment names all were moving nicely this morning. Square with a great outside bar reversal on the daily, and AFRM also waking up out of its slumber. This one also looks like it may be ready to curl, compress, and go again. So, even during choppy days like today, we're finding really solid opportunities. That PayPal was very, very nice. Very nice scalp today.
When it comes to your own trading, you kind of build yourself a watch list on a daily basis. What is your process with doing that? I mean, there's so many stocks out there. How do you kind of narrow it down to what you're focused on for each session?
Yeah. So Sonny Liston, right before he fought Muhammad Ali, he was at the top of his game, and they asked him, champ, how do you always manage to eke out a win? And he said, this is a classic line if you're a boxing fan. He said, I like to be the firstest with the mostest. Sonny Liston, a man of few words, one of the scariest humans who's ever lived, also just a incredible athlete. But anyways, that philosophy is what I try to embrace also in my trading. Meaning, I like to play names that are in play that day. I like them either at I like to play shakeouts out of demand zones. So those tend to be really powerful. I like to play the facey type of springs. If you're a white cuff trader, you'll know what I'm talking about. And I like to play signs of strength out of really tight bases or compressive type of consolidations. So when the names I'm looking at have those technical parameters and the sector is hot, like today, for example, payments were really hot, and PayPal. Just an example here. If you look at this hourly chart, right, you'll see PayPal's been putting in higher pivot lows, right? And there's your neckline. Is it pretty? Does it look like a textbook inverse head and shoulders? Not really, but all the ingredients were there to break the hourly and create a tremendous amount of momentum. I call it the champagne bottle phenomenon, right? You build enough of a cause, you store enough kind of kinetic energy in a consolidation, and when it starts to go technically and the sector is moving and sentiment is strong, and you see high relative volume and outperformance relative to other sectors in the market, that's when I look to take action.
Mm-hmm. What is your personal favorite chart pattern to trade?
Oof, that is. Would you say like chart pattern or general structure?
Both. Like, what's your favorite chart pattern, and then or if they're the same or similar, they relate.
Okay, so as far as like a chart pattern, I really like piercing reversals. I guess Scott Redler calls them the red dog reversal. I think that is a fantastic chart pattern. As far as a general structure is concerned, can you see my charts?
I'll pull it back up. Yep. Mm-hmm.
Right, if I draw on these, can you see? Let me get my drawing tool here. So what I really like is when I get I like to play the reversal. So when we finish a strong downtrend and then we start to consolidate, and typically, on the hourly, the daily, or the weekly, and we have a strong shakeout and then a V and a very tight consolidation here. In terms of overall market structure, I'm looking at a shakeout through a demand zone here and a potential sign of strength that's going to trap bears, and really it's almost like one of those those fighter pilot ejection seats where they blow through the cockpit and explode higher. So this typical accumulative pattern with a shakeout and then a very tight consolidation near the top of value is what I look for a lot in the market, and it tends to really work out nicely.
Great. When it comes to your own like personal rules, are you using like a set stop loss like percentage on your trades? How are you setting stops? Or what indicators are you using to tell you appropriate levels for each trade, etc.?
Yeah, that's a great question. I work on tier sizing, so I have 4 different tier sizes. Once a position is working and my risk is financed on the position, I like to grow it. So, minimize downside risk. And once the trade is working, I like to really build the position while minimizing risk. But they're not a percentage of my account. It's a set number. I mean, I guess it's relative. Everything's always relative to a percentage of your account. But basically, I have different risk tiers, and I'll do 20% of risk all the way to full risk. And I really like to drill this into my traders. Put your finger up, see which way the wind is blowing. Not every day in the market is the same, right? Sometimes you're structurally consolidating. Sometimes you're breaking out. Sometimes you're in a very tight range where, buyers are buying the dip, sellers are selling the rip. And if you have that kind of phase of the price cycle, I'm going to be tearing down very differently from, a raging breakout where, we've broken out through an overhead supply zone. We're retesting it. Now it's becoming support. Buyers are coming in. Order flow is ripping. So I really like the tier according to what phase of the market we're in and what potential I see in the market for that day. Not every day is going to be awesome, right? You have this weird Instagram, YouTube culture where traders, they're always making 6 figures every day and trading out of an airplane cockpit for some reason, or better, I don't even know. This is a long-term, everyday kind of job for most people who are taking it seriously, and that requires a lot of discipline and a lot of proper reading of the market, which means adjusting your risk and the amount of risk you're willing to put on every day.
Mm-hmm. Yeah. I had a question. Oh, we've reviewed what have been your best trades leading up to this, but do you have any examples of some trades that have gone wrong for you, and what you take from them to avoid that from happening in the future?
Yeah. So back to NVIDIA. NVIDIA, back to you. So NVIDIA, like I said, sometimes you're the hammer, sometimes you're the nail. In NVIDIA, we were printing 931 in the post market last night after the close. And, I considered taking, I had a quarter tier left on this. I took 3/4 off on this move here. And then I had a quarter tier left, up very significantly. And I decided to let it run overnight. And of course, woke up this morning and, it's holding the support level we needed to hold. So I'm still holding it. But it was very frustrating to see the reversal there. So that was an unpleasant surprise this morning. Again, we got plenty of cushion from yesterday, but that was not a fun one.
Mm-hmm. When things like that happen, what is it about your mindset as a trader that allows you to look at it and say, okay, it is still holding the support level we need. I'm not going to let this, scare me into just selling. And, you're still holding it, managing it at this point. What is it about your mindset that allows you to do
that? I asked my mentor one time years ago, and he looked at me and said, alcohol. So, no, don't drink and trade, kids. So if a trade isn't broken and if it's holding the level, I just focus on what I have to do on the day. And for me today, that was buying Tesla off the open, where we caught a nice 2 or 3 point surge, and then trading Google and Amazon and PayPal, and that dug me out from under the rubble.
Mhm.
So you really have, there's successful traders I've noticed, most of them have a very systematic way of thinking. They may be discretionary in their decision making, but they're highly systematic in their decision making. And what I mean by that is most traders have a internal flow chart they follow, okay, and if this then that type of logic,
Mhm.
right? So
Mhm.
if a trade is not broken, then my trading plan says focus on existing opportunities in the market for that day. And we had plenty today. Google and Amazon were doing great. PayPal and Square, AFRM were all ripping. Financials were strong. So I just focus on doing what I'm supposed to do that day. But this is why money management is so important, right? I had a really good day with NVIDIA yesterday. So I have enough of a cushion to be able to hold the trade. If it stops me out, it stops me out. I'm still green on the overall transaction, and I think that's really helpful in terms of being able to focus on other things, financing your
Mhm.
risk on a trade early in the trade, so that you can really focus on doing what you're supposed to do rather than worrying and obsessing is really the key. I mean, I've tried worrying and obsessing before, especially in my early years. I have not gotten that technique to work. Worrying and obsessing still not working for me. So
Yeah. We got a question from Twitter. They want to know your thoughts on Pfizer and Block SQ.
PFE. Yeah, so Pfizer is desperately trying to escape the its downtrend. Technically, you came into a triple bottom here, shook out twice, and you're clearly in a pronounced downtrend with no signs of that even abating. Whether Pfizer is going to be able to do what it needs to do to make bulls happy really is going to depend on its drug pipeline. They got the COVID sugar rush in 2020, and it's got a lot of work to do technically to even begin showing signs of an accumulation base. So until that proves to be the case, I mean, you're at support here, but until that really proves to be the case, there's no motivation for me to touch this chart. It's in a clear downtrend into a triple bottom. This is where there's a lot of false breakouts, false breakdowns. I always tell my traders, you trade the trend, you're going to be right every time except for the last time. You trade counter trend, you're going to be wrong every time except for the last time. And when you have really conflicting signals here in terms of a clear area of support versus a declining tops line in your face, and you're beneath all the moving averages, especially look at this on the weekly, it's very, very difficult to trade. So that would be a stay away type of chart for me. I like it when they're easy, not when they're hard. Square is a totally different story. So Square, let's profile this real quick. So on this segment of the price action, you're over top of value, right? So you had a little shakeout here, more like a couple of weeks, and a strong tight bull channel to the top of value. Then a retest of point of control, very tight consolidation, post earnings breakaway gap. You can see here, Square. This was your post earnings day, double bottom, and now you have continuation of that sign of strength past all the major pivots. So this, to me, we were talking about the charts that look like they're consolidating after a pronounced markdown. This is a typical example of that, right? We literally drew this a little while ago. So this is the kind of general structure I like to look at, right? This is what we drew, remember? Pardon my artistic deficiencies, right? Type consolidation. So this is literally that chart. Whoops. So you see the similarity. So structurally, Square, okay, they've been accumulating Square since June of 2022. And structurally, you know, this looks like it's set to retest 90.25, and then potentially the measured move, you know, could take you, if you're going to use the neckline to head type of traditional measurement, you're looking at 115.5, something like that, right up here.
Great.
So it looks good to me.
Okay. All right, JR, what stocks are on your watch list for the remainder of this week? What's the top setup that you're looking at that gets you, you know, excited to, if this happens, I'll definitely take this trade?
Well, I think NVIDIA has potential to take out 927, retest all-time highs. I think that Google, you know, had its flirtation with the 200-day. In our room, we said, you know, Google, basically, if they take out the outer line, shake it out through the 200 and bounce, it's a screaming buy. And now we're looking at 142.75 and 145 next. So beautiful bounce. This is a classic bounce of the outer line on the 200 on a wide channel. We love these types of plays. So, you know, we've been scalping Google intraday very aggressively. Like I said, NVIDIA, I'm expecting this thing to potentially retest all-time highs into Monday. It looks very powerful to me. Amazon, you know, you have your breakaway gap there. We've been consolidating. I'm looking for 190, 192.50 next. Beautiful bull trend there in Amazon. You have a minor declining tops line here setting up on the daily. You can see how well the the breakaway gap anchor, VWAP anchor, has been holding 171.50. That's where they've been buying it. And as we consolidate here and we have a volatility contraction, I expect a whole new measured move higher into the low 190s. Looks great to me.
Great. All right. So for everyone who's still with us here live, I just want to remind you to go to t3live.com/JRlive to sign up for JR's open house next week, the Momentum Express virtual trading floor, which is where he trades all day alongside many other traders, will be open for free next week, March 18th through 22nd. So if anything JR said here today made you interested in him as a trader and you want to learn more from him, next week is your time to do that. Again, that's t3live.com/JRlive. And I'm going to let JR go because JR is a real trader who trades for a living and he's not just faking it. So he's got to get back to the market. JR, thank you for doing this with me today. And we'll be back next week.
Take care, Greta. Have a good one. Thank you so much.
You too.